Hey guys, welcome back to the channel. If you're a homeowner looking into getting a reverse mortgage or just curious about reverse mortgages in general, you've reached the right place. Today, we're going to be going through a quote that I actually sent out to one of my clients that is getting a reverse mortgage in Florida on a home that is completely paid off, and they're looking to tap into some of the equity. Let's review some of their details and why they're looking into getting a reverse mortgage over a different traditional route, like maybe a home equity line of credit or a cash out refinance. Let's get into that. All right, first, what is a reverse mortgage? Simply put, a reverse mortgage is a loan for homeowners 62 and older to tap into the equity of their home without making any monthly payments. Instead, the loan balance grows over time and the homeowner has to repay back the balance when they sell, move out, or pass away. Now, just because you qualify for a reverse mortgage doesn't always necessarily mean it's the right option for you. Let's jump into some of these details and see if this makes sense for this client, and maybe it makes sense for your situation as well. Okay, so as you can see here, this is the first page of the home equity conversion mortgage or reverse mortgage quoting software or sheet that I provided my client. Now, this client's situation was that he owns a house free and clear in Florida, and the home is worth about $890,000. He called me looking to tap into some of the equity, and he was asking more around questions of home equity line of credits and cash out refinances. But as we were getting into it, it turns out that his wife had actually passed away, and he was relying on some of her income in order to kind of live out the rest of his life as well. And so, as we're going through this, he is telling me that he isn't receiving a lot of income and his credit isn't necessarily the best. As we're going through and chatting, it came to the realization that a reverse mortgage may be a better fit for him since he is older than 62. He has significant equity in the property. And so I asked him, I said, are you open to discussing a reverse mortgage? Because one of the benefits to a reverse mortgage is they're not necessarily looking at your credit score or your income. And that is how a home equity line of credit or a traditional cash out refinance is going to qualify you when you're going through the process. You're going to need significant amount of income in order to qualify, as well as good credit depending on the program that you're doing. And this gentleman didn't have very high income and didn't have very great credit. And so in this situation, he said, yeah, I mean, this reverse mortgage would be a beneficial option for me because we're going to use the equity in the property in order to qualify him for the actual reverse mortgage. You've probably had a chance to read through some of these questions and go through some of the answers there. We're going to jump down to the actual quoting part where you're going to see some of the numbers based on his particular house and situation. Okay, so as you can see here, these are some of the numbers associated to his particular property, and I've blacked out some of this information to be sensitive about his data and his information. But as we see, we have about 3 different options here. You'll see on the right hand column that CMT annual cap 5 is a variable, so adjusting rate reverse mortgage option. And when we're quoting these softwares or quoting these programs, we have to provide 3 different options. And so this one, I told him this one has higher fees, higher rates, and the cash out of pocket isn't as high as the other options. And so I wouldn't necessarily recommend this, but we have to provide 3 options. And so realistically, what I'm recommending is between option 1 and option 2. Okay, so if we jump over to the first option, CMT monthly cap 5, this is a variable rate reverse mortgage option that provides a line of credit. Now you'll see under available funds, he has access to $301,995. That is going to be what's paid out to him in this reverse mortgage. But how this works is he's going to have a draw period for 1 year and 2 years. What that means is the first year, he's going to have a line of credit of $168,139 and some change, obviously. And then the second year, he's going to have access to the other available funds within the rest, all the way up to that $301,000. This is a program that starts with a initial rate of 6.75 or 6.5% with an interest rate cap at 11.5%. And then you'll see there's actually a growth rate attached to the line of credit. And so that line of credit is going to grow 7% year over year. Then if we look at column 2, choice fixed, this is a fixed rate reverse mortgage. You'll see 8.89% would be the fixed rate on this particular option, and he would have available funds up to $272,000. One of the big differences between this and the first option is the actual closing costs. You see on the first option, there's a mortgage insurance charge of $17,800. This is FHA's mortgage insurance premium to insure that program and that line of credit. The second option does not have that since it's a lump sum, and so that does not have to be charged on the back end. And then the fees are going to be a lot lower. This particular gentleman told me at the very beginning, hey, I'm just looking for around $200,000 in order to spread that out for the remaining portion of my life that I believe I need. Luckily, he has extra equity in the property that he can access more up to that, and anything left over he can leave over to family once he sells or passes away. Two very viable options for this gentleman as we're going through it, and he actually decided to move forward with option 1, a line of credit that's growing over time. And these can actually be refinanced as well a year after opening if interest rates have dropped or if anything changes. You can always refinance a reverse mortgage.
All right, so that is going through a reverse mortgage quote, and specifically regarding a homeowner that owns a property free and clear, that needs the extra income to live out the rest of his life, that lives in Florida. If this video has been helpful, please like, subscribe, share, comment below if you have any questions about reverse mortgages in general. I know that there's a lot of negative news, and these things are not for everybody, but they are for some, like this gentleman that agrees that he does need a reverse mortgage in order to tap into that equity. Again, thank you so much for watching. I'll catch you on the next one.